All right, guys, back to work. Back to work. The big game is behind us. Now let's make some money this week. Boy, markets are setting up right now. And one of my favorite chart patterns ahead of tomorrow's CPI report. There are three clues I'm seeing on the charts tonight that, in my opinion, tell us exactly where the best entries and exits will be tomorrow. I'm going to go over why I say that, where my favorite entries are for tomorrow, and by the time we're done tonight, you'll have a simple roadmap, a simple game plan to make some money on Tuesday's CPI Tuesday coming tomorrow. I have a lot to cover in another very important video. But before we jump in, though, and talk about my favorite trades for tomorrow, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video. Hit that subscribe button for me. If you like these lessons, if you enjoy these videos, do me a favor here tonight. Hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro. Let's make some money on CPI Tuesday. Boy, the markets are setting up, and one of my favorite chart patterns. Now, let's talk about charts here. Get the Nasdaq and the triple Qs in front of me. Get the S&P and the SPY in front of me. What are these 60-minute time frames telling us right now? First of all, we know we're bullish overall, right? No doubt about that. We have an overall bullish bias on the 60-minute time frame. But I'll tell you, the big clues are these little tiny trading ranges. Don't let these little ranges fool you, because in my opinion, those two ranges right there, two on the S&P and two on the Nasdaq, those tell us pretty much everything we need to make money on Tuesday. We'll talk about why I say that, and again, we'll cover three important clues in just a moment. But before we dive in, though, and talk entry tactics and go deeper into this lesson, let's make sure we check our schedule for tomorrow, because tomorrow, it's not your average day, is it? No, tomorrow is a very big day for all of us, because we have the CPI report coming at 8:30 Eastern time, and we have to assume everyone's kind of waiting right now to figure out when will the Fed start cutting rates. We have to assume this is one of the most important data points they're looking for to make the decision later on here in the year. So CPI is a very big deal. Now, I am not going to talk about tonight what if it's higher, what if it's lower, what if it misses expectations, because you know what? I don't care, and neither should you. As a professional trader, we don't care about what the news says. All we care about is the reaction to the news report tomorrow morning. So if you want my opinion, I wouldn't get distracted by what the number says. That's irrelevant. All that matters tomorrow is how does the market react to it. And we'll be, of course, be watching that reaction, trading that reaction tomorrow morning in our trade room. So don't get all wrapped up in it's higher or lower. Just focus your attention tomorrow. Like I said before, focus on the chart. The chart will tell you everything you need to know based on the reaction to that CPI report. Now, back to our charts, though, because the money is made, always, the money is made on our charts. Let's now look at my favorite trades here for tomorrow. We'll go S&P and SPY first. We'll wrap things up on the Nasdaq and the triple Qs, and I'll make it worth your while tonight. I got some special instructions later on the Nasdaq. You'll want to definitely stay tuned for more on that. Beginning now in the S&P and the SPY, I mentioned earlier, we know we've got a big bull market right now. There's no doubt about that, but in my eyes, these two little tiny ranges, those cute little ranges, I think they tell us pretty much everything we need to make money tomorrow. Let's now drill down to our tick charts. We do not trade off time charts in our trade room. We use tick charts because tick charts, they make everything so much easier to make money consistently. This, of course, is a 7,000 tick chart, upper left-hand corner, and that, my friends, is the 21 EMA, in case you're tuning in here for the first time. I mentioned earlier there are three important clues on this chart. Let's talk about those three clues and why I think it tells us exactly where to look for best entries for tomorrow. The first clue is the big move higher. Well, we made a big move higher after that gorgeous breakout pullback we talked about in last Thursday night's video. That big move higher, what does that tell us? It says we're definitely bullish, but we don't want to chase it. We don't want to buy high up there. No. Anytime we see a big move in one direction, we expect a two-legged pullback and a retest of that high. So we know exactly where the buyers want to go. The buyers want to go back and take out that high at 66.5 on the S&P, and very similar on the Nasdaq. That's one very big clue. The second and third clues, though, are, I think, a little more important. The second clue here is a range with a pendulum swing off the high. Now, if you guys are taking my free video classes, we talk a lot about ranges in the free video course. That is a bull market into a trading range. And what do we know about ranges? They're magnets, but they love to rotate. The amount we go above the range, we can measure that amount. We can project that down below the range. And now we know exactly where the bears want to go. They want to punch their ticket around that 50-20 area, something similar there on the Nasdaq as well. Now, what's also very important about this clue is that whenever we have this very strong, what we call rotation off the high, right? This is very bearish in the short term. Now, why is it important? Well, because anytime we have this kind of bearish rotation off the high of a range, oftentimes the strength of this move, now pay very close attention, the strength of this move, because it's so strong, will oftentimes pull back and wants to retest that low before we get that big move going higher. All right. So again, it's a big move up. We expect that two-legged pullback and that retest of the high to allow buyers to buy nice and low. But we also know the strength of this rotation off the high of that trading range gives the bears a lot of momentum, which means we have to respect that momentum for the bears, anticipate they're going to pull back, hold some of these levels, and try to take out that low. Once we take out that low, my goodness, one of my favorite trades, you guys know this if you guys watch these videos, my favorite trades is after that retest, then we go back up and retest that high. Okay, that's a very, very big clue, that range with a pendulum swing off the high. And one of the easiest clues we have, if you watched last week's videos, we're now pulling back. Third clue is the previous range breakout pullback. This should look very familiar to you if you watched last week's videos. We get those big ranges. Now, what we talk about, anytime we see a range market and we break out, we know the markets love to come back and take out those highs and then bounce. We saw a mini one back on Friday morning. I know a lot of you guys made some pretty good money on that breakout pullback, that two try we talked about last Thursday night. But imagine now, you got to think the buyers would love to get another bite of that apple, right, and grab it again. So now that we know more about these three clues, put them all together, right? Put them all together. We expect that two-legged pullback and that retest the high. Lot of bearish momentum right now, right? That may continue going lower. We may take out that pendulum swing. We may go even further. When I see all this stuff right now, I want to be a buyer, right? I'm definitely a bull overall right now, but I have to respect the momentum of these sellers. And because of that, there is one pattern on my radar, and that is bear traps. Bear traps, trapping in the sellers, right? Again, they have all the short-term momentum right now. Trap the bears in, use their stop losses to fuel that move going back up to retest the high. Now, bear traps. I say bear traps in a very general way because there are lots of ways in which we can use bear traps to make money on Tuesday. For example, we can use the classic bear trap. The classic bear trap looks a lot like that right there. It's a deep pullback. The bears try once to keep it going lower. They go higher. They try a second time to go lower. Watch closely here. It's moved right below that low. It's a higher high in price, and again, move right below that low. In my free video classes, again, we call this a trap setup. It looks just like that. Right, it looks just like that. They pull back, the bears once, the bears twice. We go a bit of a higher high right there and a move right below that low, right? That is my favorite way to trade a nice deep pullback in an overall bull market. Now, oftentimes what happens is, remember, the market wants to go back where it wants to take out that high, right? So it's not just a bear trap on the pullback. As we start going higher, it's a bear trap on the way back up to retest the high. Again, the name of the game tomorrow is bear trap. And of course, in this example, these are what you would call technical bear trap patterns. Just we teach in the free video classes, right? Higher high in price, a move below that low. Good strong signal. You guys learn that in the free video course. We run higher. I want to buy low, right? Want to get in before they retest that high. Find those higher highs in price and the bear trap right there. All right, guys? Now, pay attention now, okay? Pay attention, because now let's talk about some variations of this, okay? A lot of times what happens is we get the bear trap, the entry here, right? We get that bear trap entry right here. But remember, All of that momentum for the bears right now says what? As this thing goes higher here, do not be surprised if they hold these levels and whack it right back down again. If they do, in this case, we'll take our 1-to-1 first target. Stop moves up to point of entry. We'll get bounced out on our trailer. That's fine by me. But once they go back and retest that low, remember, all that momentum off the high says do not be surprised if they go for one more leg lower. Now, think about the scenario right now. Very important. Think about this. Whoever sold on that pullback, where would they take their profit? They take their profit down here, right at that low. So it's safe to say that sellers who sold high, they become buyers at that low, right? Buying their way out, of course, take profit on a short trade. Now, who's trading down here? Who's trading down here? Rookies, right? Rookie sellers are trading down here. Let those bears come in and try once, try twice. Now, in my free video class, I call these failure patterns, right? They're another variation of a bear trap, ultimately, right? Again, bear traps is a general term we use. There are technical bear traps like that. That's actual trap pattern. Then there are failure patterns like this. Now, all we do is again, when all the professionals, all the bears are taking their profit down at that low, these are rookie traders. Think about where the rookies have their stops. Think about where if you were foolish enough to chase that move going lower, where would as my first mentor would always say, where's your pain, Joe? Where's your pain? Buy right into that pain, right? Look for that two try, two try, again, higher high in price. Okay, then we'll buy right into pain and use a failure pattern. Now, at this point, where does the market want to go? It wants to take out that high, and most importantly, it wants to go back and retest the big high because that's what they do. They two-legged pullback, trap a bunch of bears in, and squeeze those stops back to retest the high. Next question is, how do I get long over here? Do I chase it? No. What do you use? A bear trap, a technical bear trap. And again, that's a higher high in price and move right below that low. All right. That double bottom is one of my favorite trades whenever we have a bull market overall, a deep pullback, and a retest of that low. Again, it's a failure pattern and then into a technical bear trap pattern. All right, guys? That's how I'm looking to trade this on that move lower. Now, let's slow down for a second because we've covered a lot of stuff so far on the video. I know that most of you guys know how to use traps and failures, double tops, double bottoms, range rotations. But if you're here for the first time right now, this is probably a brand new language. What the heck is this guy talking about? Don't you worry. I teach all these patterns. I have hundreds, if not more than hundreds, of examples of failures, technical bear traps, range rotations. I teach all of this in our free video classes. I'll put a link up top for you. Don't you worry. Grab that link up top there, popped up right there, and take that free trading course because the strategy you're going to learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be located each day. That once we know where to look for the winners, then we time the entries with 4 my favorite entry patterns. If you're not making money right now, this is the easiest types of market to make money. It's one big trend. These are very easy, but you got to have the right strategy. If you're tired of missing the best trades right now, hit that link up top there and take that free course. That will give you an easy roadmap so you'll know exactly where the best trades will be each day. And also, too, keep in mind, too, if you can't grab a link up top there, I'll put all the important links, the description of the YouTube video, my free class links, I'll put them down there. Also, too, we trade together every morning in our trade room at 8 o'clock Eastern time. I'll put our trade room membership links in the description as well. Also, too, I'm on Twitter. If you're on Twitter or X, I'm always posting updates throughout the day. I'll put my Twitter handle down there. Give me a follow. All the details, the description of the YouTube video. All right, so now you kind of know why these 3 clues are telling us bear traps are definitely where the money is made for tomorrow. Now, let's talk about one more variation of this because, I know exactly how I want to trade this tomorrow, but the market doesn't care about me, right? The market is going to do whatever it wants to do, and tomorrow we get that big CPI report. What if this CPI report runs lower and then boing, runs right back up again? How do we trade something like that? I'm glad you asked because it's not easy. right? Because there's no way to pick that bottom. I mean, you could gamble on it, right? You could try to pick the bottom on that, but you're playing with fire. Most of us know that already, right? We can't blindly buy into it. I don't know how far that thing will keep going down. Don't be gambling on the CPI report. So again, I would love to go lower, trap the bears in and get long from there, but I don't know, right? It may keep on going. If this thing V bottoms off of that low, what almost always happens is something like this where it'll pop up and begin to grind, going higher like this, okay? When this happens, whatever you do, do not chase after it. If you're anything like me, I would always struggle with these because what would happen is I would look for the entry down here and I wouldn't get it. And then sure enough, I'm looking for it here and it keeps going. And sure enough, once I get fooled, right? Once I go, oh, heck with this, I'm going to buy right here. Once that happens, it pulls back, stops me out, and then goes without me. Okay, so whatever you do, do not chase after that grinding move going higher. Do this instead. Mark a trend line off the highs. Okay, bring it down off that low, all right? And then you want that first test off the low of that channel, all right? Now, my favorite trades are always traps below prior swings, all right? You guys learned this in the free video course, like I mentioned earlier. But oftentimes, though, this will get under the moving average. The bears will come in. They'll try to get short. It's an overall bull market, and we can use their failures, right? Their failure into pullback combination. Now, we see a lot of these, right? Look back over here, right? Same area. We run lower, we pop back up, and notice how you can draw a trend line like this, right? Off that high, right? Off of that low, and then see what happens. Look right here. They pull back below the moving average, like over here. See right there? The bears pull back. They go below the 21 EMA. They try to get short. Bam, right there, right? There's your failure entry right there. All right. So again, not the ideal scenario. I would love to buy way down here, but again, the market doesn't care about me. It's going to do what the market wants to do tomorrow. And with that CPI report, we better be prepared for a wild one. All right. So if it does V bottom off that low, again, don't chase it as it goes higher, because again, once you jump in, is the minute the market goes, okay, he's in, let's drop it now, right? They're going to pull back, stop you out right in time for a bear trap entry or a failure entry or a pullback entry. Sometimes we get all of them. Sometimes we get only one or two of them. All we know is that's the way in which I want to trade this if we V bottom off of that low. All right, guys? I'm getting kind of excited about CPI right now, just kind of talking about this stuff. And again, these are really, really good. This is a really good chart pattern right now because we're finally getting that momentum push. And hopefully we can get some bear traps here, trap these bears in and squeeze that sucker and just run back up to retest that high. How about some Nasdaq? Because there's one scenario I want to make sure you're ready for tomorrow. The Nasdaq is very similar to the S&P, and so a lot of the game plan will be very similar to the S&P, but there's one more scenario, like I mentioned earlier, that I want to make sure we go over just in case we do get that for tomorrow. On the Nasdaq right now, a 60-minute chart on the NQ, you can easily see we're bullish. There's no doubt about that, but again, like I mentioned earlier, is these ranges right here. These cute little ranges, right? Don't let them fool you. They will tell you everything that you need here to make money tomorrow. Over and down the tick chart, you'll notice up top here a 4,000 tick chart. Why less than the S&P? Because the Nasdaq is a lot less volume than the S&P, right? S&P 7,000, Nasdaq's 4,000. Again, volume is the difference. And once again, we have a big move higher. Anytime we see a big move higher, what do we expect? A two-legged pullback and a retest of the high. We know where this market wants to go here on the buy side. Second big clue, same thing, a range, right? A range right there. The amount we go above the range projects now below the range. This is a very strong, we call rotation off the high. Why is it important? Because whenever we see a very strong rotation off the high, we expect a pullback and the sellers to try. They may not be successful. They're going to try to retest that low. Then we look for that run going higher. And heads up, that is one of the that can often be the most lucrative trade of the week. That double bottom reversal. And the final one, of course, is this previous trading range. And again, we mentioned this earlier on the S&P, right? This is a prior range from last week. Markets love to break out of ranges, come back and kiss it right before they run right back up again. All of that information, all of that tells us why bear traps are by far, at least in my eyes, the most consistent way. There are lots of ways to make money in these markets, right? But you want to make money consistently every day. I do think bear traps are the name of the game here for tomorrow. And just as we said on the S&P, it's the same exact thing on the S&P, right? As we begin pulling back here, I'm expecting bears to try to retest the low. So I'm looking for bear traps during the pullback. If it runs higher, again, technical bear traps. That is a higher high in price, move right below that low. I'm looking for bear traps, again, on the deep pullback or after we start making that run higher. Because, again, I'm anticipating those bears will try to short this thing and run back down again. I want to make sure I trap them in and use stops as fuel. I love the idea. I said earlier, I love the idea of a bear trap here. Up, they hold, they retest, double bottom. What do? Failure pattern now, right? Trap those rookies in. 1, 2, use their stops to squeeze the move going higher. Why stops? Why are stops so important here? Because we're so bearish in the short term. I realize we're overall bullish, but I'm a day trader, all right? I'm a day trader. Short-term momentum. In order for us to use small stop losses, if you want to lose a small stop loss, you cannot go against all momentum without something like a stop run that gives you some, an edge, right? You have to use stops to turn that momentum around, right? Again, we're overall bullish, but very bearish here in the short term, right? You can't use a small stop. You can't use small amounts of risk without having some sort of bear trap entry or failure entry to give yourself the juice you need to start moving in the right direction. All right. That's why stops are so important and why we love to use what are called 2-try failure patterns in our trade room. Now, again, remember, at that point, once we go higher again, when this thing's going higher tomorrow, the one pattern you don't want to miss is that bear trap pattern. All right. As the market goes higher, you always look for these. Always look for these. We're going higher, shallow pullback, higher high in price, a technical bear trap, right? A technical bear trap. I say technical because there's a difference between a technical bear trap and a 2-try failure. They're both under the category of a bear trap, right? But one is actually the legitimate call a bear trap. Anyways, you'll learn more about that in the free video course. The one thing I want to talk about though now is, and of course that V bottom is also in play there as well, right? The V bottom, the pop up, right? And the grind going higher. We don't chase it, right? We draw trend lines off the highs. We bring off that low. We buy that first test, right? We don't chase it. We draw trend lines off the highs. We bring it off that low and we grab that first test. All right. And this could be any of the entry patterns you guys are learning in the free video course. Okay. One more variation of this I'm going to talk about, and that, of course, is a trading range. All right. Now, again, big news tomorrow morning. We may end up going sideways in a trading range down here. All right. The market's making a tuck and cover ahead of that CPI report. Okay. If we do go sideways into a trading range, remember two things. One, we're overall bullish, and two, we're short-term bearish. All right. The easiest way to make money in a bear move like this, again, overall bullish into a range, is to wait for a breakout and look for, just guess, a bear trap. You're exactly right. Look for that bear trap to get in underneath that trading range. Remember, ranges act like magnets, and they love to rotate, right? They love to rotate from the high down to that low. These can be what I call a slingshot reversal. Okay, we saw one of these last week. I think it was on crude oil, right? Slingshot reversal. In other words, it breaks below the trading range, but again, because we're so bullish overall, the bears get fooled. It's a technical bear trap, right? It's a higher high in price, a trap below that low. Again, because we expect to try to come up and retest that low again. That does not change. Remember though, if we can get that bear trap trigger down here, we can then measure the amount below the range, use that amount above the range, and that will tell us where to kind of put our targets up there, right? Now, oftentimes, these little fake out breakouts below that trading range, these oftentimes will just rip and keep on running. It kind of slingshots, right? Kind of slingshots off that low. And again, we're not an overall bear market, right? We're an overall bull market. We just happen to be in a deep pullback right now on the 60-minute, or of course on these tick charts. All right. So if we do end up going sideways here, that does not change very much about it. Just try to wait for that break below the trading range, trap those bears in. And again, once we know how big that breakdown is, we'll then know where to put some final targets there, okay? If we go through those areas, let's say, for example, we find the final targets up here. If we end up going through those areas and we start going higher again, yeah, now you know right there, right? There's that bear trap entry right there, all right? So again, think about that move below, move above. If we keep going through that area now, you know where this thing wants to go, right? It wants to go back and take out that big high because, again, that's what big moves do. The challenge up here now will be we don't want to buy high. Right? We still have that bear momentum going lower. There will be bears here trying to short this thing back down again. Okay, let them. Okay, let them try. Once they're in, now we got them. Right? Once those bears try a couple times up here, now I know where those stops are. And again, the stops are the fuel you need to get nice, easy first targets, get rid of the risk, move stop to point of entry. We talk about the trade management game plan in the free video course. All right? So if we do go sideways here, not a lot of this changes. Just focus on trying to get into those bear traps underneath, or make sure it's a very nice, strong punch going higher, clear that pendulum swing, and then look for those bear traps to finish off the move here. Okay? Do not be surprised if we wind up around here, they whack it back down again, we do it again. Right? Do not be surprised about that because, again, it's a very strong run going lower. Right? That strong run in the short term is a really big part of this. All right, these are really great situations to be a trader if you have the right strategy. All right, guys, that's my game plan for tomorrow. Now, want to trade it with me? Tomorrow morning, 8 o'clock Eastern time, we'll trade this stuff together tomorrow morning. I can't think of any better way to learn to trade than to do it with us, trade it with us tomorrow morning, every morning at the opening bell. I'll put all the information you guys need, the description of the YouTube video. We trade together in our trade room, 8 o'clock Eastern time tomorrow morning. I'll put all the membership links, the description of the video, my free class links. I would definitely start there. If you're watching for the first time right now, all the Twitter information is down there as well. All right, guys? So check the description for more information there. How about questions? Any trouble getting access to our free video classes? If you're having trouble or you're having questions, don't be a stranger. We're always here to help out. You can always call, email, use live chat. Megan and I are always here to help out every step of the process. All right, guys? A great lesson for tonight. Hope you learned a bunch. Hope you use this knowledge to make a bunch tomorrow. Don't go gambling around that CPI report, right? The news is noise. Trade the reaction, and we'll do that tomorrow morning in our trade room. All right, guys? Thank you so much for watching all the way to the end. You are the people. You are the person I do that for. So thank you so much for dedication and watching all the way to the end. Now get out of here. I'm sure most of us had a little too much fun on Super Bowl weekend this weekend. So get a good night's sleep. I will see you guys tomorrow morning. If not, same time, same place tomorrow night. And we'll do it all again. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.